Have you heard of the recent student loan cancellation and reliefs? In the United States, half of the entire population has debt, whether car loans, credit cards, or mortgages. About 45 million Americans throughout the country owe $1.75 trillion in federal student loans that they took out for college as of August 2022. Thus, the U.S. has been burdened by student loan debt, and the average American dedicates over half of their life to repay their debt in student loans. As politicians debate solutions to the escalating costs of college that result in often debilitating amounts of debt, there are two ways to get rid of unpaid student loan debt: bankruptcy or loan forgiveness. In this video, let's explain more about the recent student loan cancellation and student loan reliefs. Here's everything you need to know about USA's cancellation of student loans. A few days ago, President Biden unveiled a plan to erase significant student loan debt for millions of Americans. He said he would forgive $10,000 in debt for those making under $125,000 annually and $20,000 for those who had received Pell Grants for low-income families. The debt cancellation, albeit less than what some Democrats had pushed, follows months of discussions over justice and concerns that it may worsen inflation before the November elections at the White House. In remarks from the White House, Mr. Biden said, "All of this means individuals can finally start climbing out from beneath that mountain of debt. Finally, consider starting a family, a business, or purchasing a home. Additionally, when this occurs, the entire economy benefits." However, although the Department of Education promised to set up an application process by the end of the year, it is unclear when the debt reduction will be implemented. And if you're wondering about the price of student debt relief, it will rely on how many people apply for it. However, some estimates place the price at $300 billion or higher. On top of that, there's pressure from the progressive Democrats who contend that debt forgiveness is essential to alleviate racial imbalances in the economy, while President Biden has been grappling with how to handle the student debt issue for months. However, some claim that the broad debt forgiveness is unfair to people who must sacrifice to pay for college. Additionally, some of the economists are worried that debt relief may increase inflation because it will give people more money to spend. Students who won Pell Grants are qualified for a $20,000 loan cancellation. The bulk of borrowers, 60%, come from families with annual incomes under $30,000 and have earned Pell Awards. According to the Education Department, up to $20,000 in assistance will be available for 27 million borrowers. As long as they make less than $125,000 annually or belong to households making less than $200,000, millions of additional debtors will be qualified for $10,000 in debt relief. The income that borrowers report in 2021 or 2020 will determine how much they owe. By effectively lending out money that will never be returned, the action could cost taxpayers $300 billion or more. However, because much of that debt was unlikely ever to be returned, it is more difficult to estimate the actual cost, which may be lower. Before the coronavirus epidemic, more than 8 million people, or 1 in every 5 debtors with payment due, had defaulted on their loans. Many individuals had relatively low sums and are now qualified for debt cancellation. Other adjustments to the repayment structure that Mr. Biden suggested would lower many borrowers' monthly payments would need to be implemented through rulemaking by the Education Department. In contrast to the current 10% maximum on most income-based payment arrangements, he wants to limit undergraduate loan borrowers' monthly payments to 5% of their discretionary income. To prevent debt from rising, he is also pushing for the government to pay the monthly interest for individuals making payments, even if their payment is zero since their income is poor. While making their monthly payments, many borrowers are getting more into debt because interest continues to accrue under the current system. The process was further exacerbated by rising inflation. However, Mr. Biden's economic advisor argued that the cancellation would have little impact on growing consumer prices by restarting low payments and combining loan forgiveness with income limitations. This could negatively affect taxpayers and students by incentivizing schools and universities to raise tuition while the federal government picks up the tab. To come to think of it, Mr. Biden's plan, including its restrictions on future loan repayment by borrowers, would be a massive subsidy to the same sector that created this mess with ever-rising tuition and fees. Instead of further reducing the tuition and living costs, we should rein in higher ed pricing. I mean, education is expensive. Students might quickly pay tens of thousands of dollars each year to fund their education when they add up tuition, fees, books, and lodging. As a result, 65% of students have student debt when they graduate. Scary. However, the truth is that many people use student loans to pay for their education. Now, with that explained, let's examine the benefits and drawbacks of student loans, provide advice on reducing the need for loans, and address some frequently asked issues to understand the concept of student loans better. So, student loans, are they a mistake or a good idea? Student debt will continue to be a reality, for better or worse, unless tuition costs decline and financial aid options significantly increase. Some might ask whether taking on debt to pay for higher education is worthwhile. A college degree, however, offers the clearest route toward increased earning potential and employment alternatives. Student loans significantly increase access to higher education for those who might not otherwise be able to afford it as tuition costs rise. So, it's important to borrow wisely. Here are the pros. Student loans help students afford higher education. For many students, loans open up a more comprehensive range of possible colleges they otherwise wouldn't be able to attend. Although taking on debt is a significant choice, obtaining a college degree can open up more employment alternatives and financial opportunities. Although taking on debt throughout college may seem intimidating, students frequently repay these loans slowly over many years. Additionally, college graduates can repay their loans in amounts that are consistent with their income through most federal student loan programs. Lastly, going for student loans has lower interest rates compared to traditional loans. Personal loans, auto loans, and credit card interest rates are all often higher than the average rates for student loans. But it doesn't mean it's cheap. Student loans are just a little bit more practical than other types of loans. Now, with the pros, what are the cons? Okay, it's proven. You'll probably be spending more over time. As is the custom with loans, students who take out debt accrue interest on the money they borrow, which may cause you to pay thousands extra in interest throughout a typical 10-year student loan. Ouch! Plus, this debt can cause long-term financial issues due to the necessary monthly payments. Lastly, loans are viewed as financially dangerous, and it's not the greatest financial move for everyone, even if the majority of students do so. Okay, thanks so much for watching. Don't you feel great that you know more about the recent news? If you feel good and know that you've learned something, please tell us in the comment section. Maybe even share some lessons you've learned from your experiences. Be sure to click on this or this video to watch more from this channel. Don't forget to subscribe, and I'll see you soon. Bye.